things are going to change. Are you with me? Hello and welcome. I'm Wyckoff Trader, editor of the Emini Market Timing Newsletter, the AM Term, in your email inbox before the opening bell. This is Market Recap. This is the big 650. It's going to be for Wednesday, April the 15th. I don't know about you, but when I used to hear that number and that name, April the 15th, it always brought just a little concern. Now with 7 million people unemployed and whatever they push the deadline to, this is a whole new reality. My goal is to help the intraday scalp trader level up, extend their average hold time in a trade while increasing their potential profits by using WB's timing of the hidden internal E-mini clock, the clock that controls all turns intraday every day, and of course the Wyckoff Principles. Supply, demand, cause and effect, never versus results. What makes me different? No MACDs, no stochastics, no moving average crossovers. These are called lagging indicators. There's nothing lagging about price. Pure price action, pure price behavior, just the interaction of price, volume, and time. The X, Y, and a Z. Just as Livermore said, cut your losses short and let your profits run. I'm old school market principle, which I'm an expert. I trade only one financial instrument. I do one thing. I do it well. I trade the E-minis, futures contracts. And these are the March 2020s. I've been trading for the past 13 plus years with consistency and without fear. We may need to update that. My apologies. I'm a trader first, old school market principles educator second, and levels you can trust everyday supplier third. Define your risk, execute the trade, and have a plan for taking profits. Either it works or it doesn't. Are you with me? May 2020. There we go. All right. Let's get to the disclaimer. Yes, I have skin in the game. I trade my own personal account, SARDINE, TUNA, full pitch trades are for educational purposes only. I'm not a futures broker and do not manage any accounts. It's my intent to show where trades may occur. What you do is up to you. You can follow my levels ideas to profit or loss. You determine trade size, when, where, how you trade. CFTC Futures is not for everyone. It's a volatile, complex, and risky business. Before you invest, know how much you can afford to lose. Are you with me? Let's take a look at what we did yesterday, the previous day. We talked about this in the Wyckoff Wave. I thought of a divergence. From my perspective, as I talked about earlier, I was concerned about this major volume spike right here. Oops, let's go that way. That was not what I wanted to see. Somewhat felt that they were selling and they sold on the open and then they checked it here. Now, the thing about you want to consider about the market is there's a composite man. That is the combined net selling of all the, some people don't believe there is a composite man. Some people call him the composite operator, but basically that's the net selling of all the folks that are buying and selling. And I do feel that there is a composite perspective, a composite mind that takes over. Now, if you look at the Wyckoff Wave, you can see a bit of a divergence. And we went through the numbers here, and memory serves me correctly, this was the same amount of units as this was here. It's just really all you need to know. Now, your notion would be, as price starts to push back up towards the halfback of this reaction, that's when you'd want to start selling. And that's actually what the Composite Man was doing. Now with the E-mini, that doesn't always play out that way. This is the Wyckoff Wave. It's a custom index that Wyckoff put together. This is the E-mini. The thing about this is you can see as we're pushing up, and we talked about this in major depth, you can see a little bit of a shortening of the upper thrusts. So this next thrust should have went up to here, ideal, but it didn't. It barely made it and it fell back. Then of course it came back in, and the last 5 minutes, notice the volume is coming up. It tells you something. If you take that, factor that in with overnight glowbacks, factor that in with the news, which we're going to talk about in a minute, puts it all together for you. Let's go ahead and take a look at the numbers. Are you with me? First takeaway is we're almost half to what normal would normally be. When we get in there, would be ideal, but we're still not there yet. Open up a glowbacks at 28.42, put on a high of 28.45. That's not good. Not what you want to see. That's the first thing. Put a low, 27.82, and that's where we're going into the opening and hitting the send button. We're already below the previous day's low of day. And we'll have to look at this to make sure that those numbers are correct. It's kind of the first time we've been looking at this and how it plays out together. Most likely, this is, how can I say that? That's what I got to look at. Yeah, this is today's range. So that won't always pull together. We'll have to think about that as we make the video. This would have been the closing day's range. Now you can see that as we get down here to the numbers. And I've been, how can I say this? I've been considering which way to play this out. Somebody might look at it this way. But then this would have been the previous days. So you can see here the low of day of 27.96, and we were already 27.79. So I'll think about it a little bit more. Come on in. We had the daily pivot set up up to 28.28, and of course these are the floor trader pivots. Now, opened up at 27.72, immediately found the low. So the opening drive was down. On the levels, I had 27.50. And of course, that was great efficacy there. About normally you want to come in a little bit higher. At these trading ranges, you're really looking like anywhere from 8 to 10 handles. We're probably going to start pulling that back in. Normally it's 2 to 4 handles every day, but it hasn't been normal since the contra-virus started off. So as you kind of see that base forming, that had been the best place. And a big 5-0 would have been an ideal location to get that on also. First trade at 27.69. That's right out of the gate, and you may have not been able to get that, just to let you know. High day came in at 27.92. And like I said, the low day, 27.51. Settled at 27.64. And, of course, 1.3 was the volume. Not a really bad day at all for the volume. Let's take a look and see what the pundits had to say. April the 15th. Every time I look at that, I think of tax day. And oddly enough, it usually falls on a Wednesday. Stops climb off the worst levels, but still close sharply lower. And as we talked about the previous day, we saw some supply, which we talked about right there. Sharp pullback came as economic news reminded investors of the devastating economic impact of the coronavirus. Yeah, earnings seasons are going to have a way of doing that, but I don't think they're going to have enough. I don't know. Maybe they'll really get killed or crushed come the next earnings season. Bank of America started off with a thud. Goldman Sachs, that normally kicks off everything, but that didn't do too well this time. Negative sentiment on the market. Released report, sharp decline in U.S. retail sales. Hey, really? A March report, new orders showed manufacturing activity contracted. That's exactly what you would have thought. Like I said, we got us a pretty good, decent day. We'll break out the trades a little bit later. On the one handles, had you taken them, you would have 2,500 and within 2 trades, but you'd had to hold in a little bit longer. And of course, on a 3 lots, you could have made 7,500. I guess if you do want to sign up, obviously, if you're subscribing, or excuse me, if you got a trial out to the newsletter, that'd probably be the best way to do it. Click on that button there. I started this January the 21st, I believe. And I checked it tonight, and I said the previous one, we'll probably be looking at 2 million tomorrow. 2 million infected with about 134,000 deaths. Somebody definitely going to have to pay on the karmatic wheel, whoever brought whatever over. And not the ideal day you want to see. You can easily see here a bit of a mixed bag. For the most part, the blue is going to be red and the brown is going to be the green. You can see it was more biased toward the major red side, minus 4%, minus 4%, minus 4%, minus 7%, minus 2%, minus 5%. Not what you want to see for a bullish day. And like I said, that March the 23rd, but the big test was that spring where we just ripped right out. And that was opening on Globex, and we never looked back. Had a couple of lockdowns that caused that. And you can kind of almost assume that would be the case. Tried to have that YouTube video up for the recaps. Had just a little concern figuring out how the best way to use the software. It's all the learning process. And like I said, we did see that volume spike. Buying on the dips was seen. Let's check to the 3 o'clock marker. I haven't really had a chance to look the new updates, what we're looking at looking forward. Right now, we're looking at 27.98, and we pretty much retested that supply line as we pulled back about on, like we said, that April the 1st, 2nd, and 3rd, and we haven't looked back. And that was really where you pull back and you tested that supply line, and that's the best place to get on trade. Sure, the institutions started digging in, but as I said, March, January, February, March the 23rd. But that's really where the test of that supply line was coming in at. The thing we're looking at now, especially as you look at the day from the prior day, we're almost touching into that overbought line. So it's just natural for price to pull back. And if you're looking at estimating where that demand line may be coming in at, it would really be pretty much the half back. Or where you're looking at the top of the March the 27th. So you could be looking about 26.11-ish, 26.50 or so. The price would need to pull back to touch to get support to respect the demand line. Are you with me? This, to me, is really the main guidance of how we're looking at the market, what institutions are looking at, how that opening print lines up. And as we were coming in, Trump was talking about not funding the World Health Organizations, and I don't blame the guy. Like I said, it's on my website, and I did it on the opening print from the second Friday ago. If one intelligent young man, well, we'll leave it at that. You decide which, can figure out there's a problem on January the 22nd. And then on January the 31st, the World Health Organization leader said he did not see that this would cause any interstate commerce or travel issues. And we were already looking for the first death in the United States. And they were hesitant to call it a pandemic. I think they did that way into February. Then something just didn't seem to be right. Either way, a lot of folks have been hurt, and we all have been affected, and our life will never be the same. Controvirus, social distancing, yada, yada, yada. Chinese shares fell back, cutting interest rates. Hey, guys in China, it's a communist country, and those folks are under the microscope, under the wire. All their cell phone data, all their metadata is being given up. It's not a pretty picture. And if they try to do the same thing in America, someone better stand up, because the technology is all ready to take over and pretty much wipe out any sense of anonymity, freedom, expression, and freedom of movement that will ever exist between now and the future. All right, Europeans fell. Obviously, country virus, 80,000 people have died in Europe. That's sad. The first countries was North Korea and I think South Italy, or North Italy and South Korea. Pulling that from memory. I always get the reverse of the North and the South, but happened in Italy first, and it happened in Korea. Europe from social disease, about 2/3 of global toll. European Center for Disease Prevention Control, underlying sentiment turned cautious. Yeah, I kind of think so. Widespread pandemic with a raising death toll across the globe continues to influence the market. International Monetary Fund, the global economy might contract by 3%. And I believe I put it in the pros of the numbers. We'll look at here. Retail sales were up for the taking. Federal Reserve also scheduled to release the beige book. So what was going on with the news? With the bearish. Okay. That was bearish. And if we look at the pros and the numbers, that was really bad. I think I put it right here. Yeah. The virus will slow global economic growth, the slowest since the Great Depression of the 1930s, grandma and grandpa's. Asian European markets, this tries to be the latest, 27,000 were dead, 127,000 were dead, and 2 million were infected. You can never, gosh, this is grim thinking about it. Like I said, I thought about it January the 21st. Here's what I'm looking at right here. 2% down, 2% down, 1.5% down. Obviously, NASDAQ's usually the last to give it up. Retail sales, industrial, we were pretty much getting ready about 8:30. Bigger picture supply, inside markets, by the time I was going to print, look at there, January the 28th. That's when I was on top of it. And I've yet to be taking this out. And it really wasn't a thing. Okay, yes, I'm thinking they did. The pundits haven't seen the lows also. Well, obviously, you got this trend, but understand this has started right here. This is that big volume spike that I talked about. There's been nothing but retracement. Yeah, I've talked to a couple of people. They got theirs. It's a good thing. We're starting to see reducing the daily trading range. It was a keep a day, but on that, you can always anticipate still a strong, it's not really a strong trend in the bigger picture, but it's a strong trend as opposed to the March 23rd and to April 1st to the 3rd. Understand, we've broken that supply line. So now you're getting that final push up, and I'm just to my eye, I'm seeing that coming into the overbought line. Favored to move the bear, it could flip. I'm still going to keep it bear. And of course, the spill down AM high, and this day there's no mid AM. Okay, and lunch low, mid PM high, last hour low. Not the ideal day you want to look at from the bearish side. A lot of folks like lean toward the bullish side, but it takes both bears and bulls to make a market. Are you with me? Here's the main thing. The Wyckoff Wave. Now, it's a combination or a macro set of the Dow 30, something that Wyckoff used. It's more sensitive than the Dow in the future, but of course, everybody's looking at the Dow in the future. We're looking at the buying and selling wave. The first wave was a selling wave, okay? What we're looking at is a couple of things. Sorry about that. All right. We're looking at the distance from here to here. That's 120 minutes. Now, then we get a buying wave that recovers the same. So at this point, we know the price is evenly matched. Now, of course, we're coming in to about 11:30-ish. So we're looking to see how this, if this was a 1, this was a 2, and this was a 3. Notice how this number's odd and this number's odd. So we want to compare the price extent and the time between the third wave and the first wave. Okay, the first wave was down 120, but then yet price recovered all but 110 minutes, and for the most part was even stronger because it took less time to regain what it lost. Therefore, now you can still see that there is some checking, there's some selling, okay. You can still see that they hit it again here with a volume spike. And that's okay, because they may have some more. So if you can see, price is moving down, and actually the volume for the most part is moving down overall. Yeah, you got a few little minuscule spikes, program trades, but for the most part, the bigger picture volume is moving down. That's really all we're looking at. Now, these are 1 minute, and each line here is 10 minutes. So I'm actually looking at a 10-minute chart in my mind. And that's what Wyckoff did. It's really just a 5-minute chart because we're looking at in the half of these lines. Now, obviously on my chart, and that's something that I created, you can't buy it anywhere. The contrast is a little bit brighter. Okay, got that out of the way. So you can see now we retraced not even what, third or 3/8 or 0.38. And you are probably 25%, if not 18%, looks to my eye. And it's only 40 minutes. Okay. once again, we pull back, and there's a bit of a selling wave. But this pretty much checks that up rally as you see this volume spike here. We pull back, say 1/3 to keep it simple. The same amount of time, pull back at 1/3 of the time, okay? And we pull back at 1/3 of the distance. Now, once again, I'm going to say this again. This is hardcore Wyckoff. Hardcore meaning this is Richard DeMille Wyckoff. This is a Wyckoff Wave. For the most part, the bulls and the bears, and Wyckoff never liked to say that, never said that. The buying and the selling pressure is equally matched. But now as we pull back in time by 1/3, we also pull back in price 1/3. Now, Gann might say price and time is square, but I'm not a Gann guy. Wyckoff called Gann a calculating machine, to be honest with you. He did not like Gann. And they were competitors, obviously. It was the Wild West back then. So here's what you're looking at. Here and here. So we pull back, see, 120 minutes here. We pull back 40 minutes here. So obviously that would be 1/3. My math still works correctly. Therefore, once you start to see this bid coming in, and notice as we're coming up here on the volume, this is the Wyckoff Wave, obviously. Volume is moving up. Get a bit of a volume spike here. And it's not uncommon for price to move up in units of 60 minutes, which would be an hour. That checks that movement. Now, a lot of folks don't really believe in the floor trader pivots. With the Wyckoff Wave, they're pretty much dead on, which is kind of interesting. It's kind of funny to me, but interesting. So as you're seeing the price is moving up, then you want to look at the time also and say, we're getting close to that, that 1 hour marker or that 55-minute marker. Let's see how price is doing. And when you see that big volume spike, it kind of tells you they're checking that rally. And I have no idea how they can see these floor trader pivots, but obviously they do. So from a floor trader pivot perspective, price moves down into a natural level of support, which would be your floor trader pivot, and this would be the daily pivot. I'll go ahead and say it. I'll get them messed up. S1, S2, and of course S3. Now I call this that thin white line. And anytime price gets down to that thin white line, that's pretty much the extent for the day. Now, what you need to know about the Wyckoff Wave is I had to adjust it a factor of 6.6 to be smaller in extent. Because price, to be smaller. Because when the price really started ripping, it was just completely off the charts. And I hard coded it so I couldn't accidentally change it. So I know exactly where price is at. All right, so you can easily see now that we're looking at 1/3 the time. Now this is hardcore Wyckoff. 1/3 the time. And the first selling wave, we don't say bears, we say the selling wave. Selling wave is obviously due to the selling pressure. But understand, as price is moving down and they're hitting those bids, somebody has a bid for them to hit. So you should start to see that each thrust down is harder because they're holding that bid. Okay. And that's where you're going to see that coming in at that floor trader pivot. Usually the thin white line I talk about, which is support 3. And you can see a big volume pop right there. Right there. So if you want to use Wyckoff, you can say that's preliminary support, selling climax, but that's just so minuscule in that. Same thing, automatic rally, secondary test, and then you form a base. All right, so if we're looking at Wyckoff, okay, you need the base to form. And we'll talk about the buying and selling test another time, but you want that base to form. And you need that base. And notice where we have this volume here coming in, price moves up a little bit, but notice before it starts moving up, it's testing that same level. And it's testing it. See here, we have the volume of this spike here. Down here on that same test, notice the volume is a whole lot different. Here we're looking at a difference from there down to there. Now, I don't know about you, but to my eye, I can see price coming in, holding on low volume, and then lifting on somewhat little volume. And then they check the rally and it pulls back. And I can see price moving up again. Now, this would be one of the only time he would ever use the word, Wyckoff would ever use the word bullish price behavior. That's what he would say. Okay, bullish price behavior, and we pull back. The only difference is, on the very last, we kind of spoil it for the party. But it looks like they're coming in, but they're buying, obviously, the top where we had the top of the second wave, the buying wave, and they're coming in with the bid, and they're holding price. So price isn't able to come back. It's the same thing, you see. Up for 60 minutes, but the extent, even though the price, the time duration is the same, the price is not able to pull back because you can see a bid coming into the market here at the end. So you should see, well, I've almost drawn it, haven't I? You should see this in price. So I'm not really looking at, I'm looking at these spikes, but I'm also looking, kind of blurring your vision or whatever you want to call it. But we're looking at how the volume is dropping down. And obviously this is during the lunch slog. This is during the lunchtime. But then as a afternoon trade starts to pick up, you can see the volume starting to pick up. But you can also see the prices moving down. So it's only natural, guys, to see these type of things because, once again, on the daily, the bigger picture perspective, we're getting into what we call the overbought line. Now, there's, buying has not gone wild, obviously, but that's a good thing. You don't want price to get so much out of control that it's just hard to deal with. So the real takeaway here is looking at the buying and the selling waves. You can see the price easily clears. It puts on a new high a day, but it's checked by the floor trader pivot and then pulls back. Okay. Yeah, it does. It pulls back to the S2. So then we get a bid coming into the market. This would be effort versus result. That would be the result. For the sake of convenience, and of course, that's the effort. And effort is lagging behind the result. I always get those backwards. The result is lagging behind the effort. The effort to get price down is, hitting the bids, let's just say, when somebody is holding that bid and they're just, I'm not really going to call it bag holding because it would take a little bit longer for a bag holding. But at the same point, you can still see the same thing. You can see that result to push down. Okay, it's not. How can I say this? It's not in proportion to the effort. Hope that makes sense. All right, the base. We're looking at the first comes in about 10:30, like clockwork actually. And then that base lasts up to an hour. That would be 1:30, an hour and 30 minutes. So that would be 90 minutes of a base. Okay. We'll talk about the buying and selling test later. So for the most part, the downtrend, the buying pressure was now being offset or met or absorbed. And we could talk about absorption another time, but be absorbed by the selling. Excuse me, the selling pressure was being absorbed by the buying pressure. And so we formed a base. It's only natural to see. So you would either want to get on, the bigger picture, as far as getting long with securities that you felt were in your best interest. There's a lot to Wyckoff that were actually proven to be stronger than the market. And I got some surprises for you guys on YouTube. We're going to let loose on you, but we're going to take it, slow. But you would actually want to be getting long in those securities at this point in time. And this was about 230, 220, something like that. And then, of course, if not there, here would have been another good time. And you got to be thinking about price is going to top out once we get to the high of the opening. Opening balance. But it's all how these time markers are factoring out. So, yeah, the best place to get long would have been just before, looks like 2 o'clock, 1:30, 1:40 or something. We're in here. As you can see, the volume is pretty much coming down. Pretty, how do you say this? Not really non-existent, but price is moving on little volume, which means there's no more offers in the market pressing down on the market. Then, of course, as we pull back, then volume's coming in the market. The afternoon sessions opening up and volume's getting on board, and everybody wants to get a piece of the action. Whatever news, I'm sure that had something to do with it. Wyckoff always said the news was factored into the price. It was never a question for him. That's what the Composite Man knew. He knew the news. And, of course, back then they had insiders. And insiders that told outsiders that the SEC wasn't even around because they weren't even invented back then. So there was a lot of things those boys could do that we could never do. All right. Hopefully that helps. Are you with me? Let's go ahead and get to the next. If you're taking a screenshot, close your eyes and blink 3 times. Some of this is going to be for the subscribers. And like I said, if you do want to subscribe, you get the inside scoop. Be a good thing to do. I think I'll have a link somewhere in there. I haven't really figured out how that all plays out. With the Wyckoff Wave, we already talked about. This is the Wyckoff Wave on top. This is the Emini on bottom. Everything is there. You can see how the volume won't be that beautiful, not that classic, but that's the same type of thing. You can see where we got a bid. We can see a volume holding that bid, and then price is held in a tight trading range. All right. Get a little bit of a higher highs, higher lows, higher highs, higher lows, higher highs, a little bit of higher lows, and we're holding. And then time to the Wyckoff Wave, not the clock. You can see the price is really starting to lift. Just a little to no volume, and that's a good thing. And we pull back, and of course here some volume comes in, and they're getting a bid on here also, which is for the most part, on top. And a lot of folks would say, what was resistance now becomes support. And it's only natural. We're not going to get a whole lot of distance in this particular move. Price is being checked here, and of course it pulls back, and the same type of thing. A lot of volume comes in. Whether you're using, well, you can't use the Wyckoff Wave unless you create your own. Whether you're using the Dow, it's always good, to have something else to lean on to kind of give you a feel for where things were going. See, for the most part, you see, surely you can see this. Trades at the same exact place as we opened up. The Wyckoff would say this day, I got a little bit bigger than I should have, but it pretty much did that. So Wyckoff would say, put in an unfair low, put in an unfair high, and then close somewhere in the middle. So yeah, he's waiting for price to get out of this here. He would have put a buy stop here. I think I got that right. And when I was talking with Craig, he would always say that's advanced Wyckoff. But Wyckoff always used buy stops and sell stops to enter in the market. We can talk about that another time. That's how he would have played it. And, okay, Wyckoff would have had both. And he'd used the one cancel his other order. That's how he would have played it. All right, let's wrap this up. Are you with me? I'm getting somewhat giddy. Hopefully, we'll get to be using the tape reader chart again. And when we do, we'll go ahead and change the resolution so we can see what's going on. So we'll go ahead and go on. And once again, if you do have any questions, let's go to this. Email, obviously, is a good. Phone's fine. 1-888-Wyckoff. That's 1-888-WYCKOFF or 1-888-992-5633 or feedback at Wyckoff AMTrader. Your feedback makes me better. Let's wrap it up. I think I got it right. There. I've had the newsletter since 2017, August the 18th. We're at 2020, so that's 3 years. WB will probably be close to passing away next month. It always makes me a little sad. But I started doing levels since August 18th, 2018. I did not intentionally line that up. I had actually no clue. The Serendipity put it together for me in that particular timeline. I've given over 628 trades, and that's a whole lot more now. I just haven't updated it. I wanted to see how this particular bad wave ends up. You could have made 4,344 plus profit points, and we're looking at 217,000 on one lot and 651,000 on three. This particular sample was from the first of the year to the St. Valentine's Day Massacre. The coronavirus was coming on, but not known and popular. It got popular after Valentine's Day. 75 trades total. We made 162 wins, and a percent win-loss ratio was 82%. 411 trades at that time, 411 handles that we were able to deliver, and on the one lot, you could have made 20,000 on one lot and 61,000 on three had you taken every trade recommended. Are you with me? Let's get to what I think is the most important part. What moves the market? The number one mistake most traders make is to step back and wait for the market to prove them right, when they should be ready, willing, and able to let the market prove them wrong. The qualities essential to the equipment of a speculator, trader, investor are judgment, self-reliance, courage, prudence, and pliability. And these should be added to quality and patience. In brief, rigid self-control is half the battle. You must train yourself to act upon your decisions and to carry them to a successful conclusion. Operate with no emotions. Be indifferent to each trade's outcome. Be willing to let the market prove you wrong. And with that, as always, be nimble and be quick. And don't let the market make you